Welcome to the Legal CFO.
Welcome to the show where clarity meets profitability. This is the Legal CFO with Ryan Kimler, the founder of Net Profit CFO. If you're a law firm owner looking to get a handle on your finances, grow your bottom line, and finally take control of your numbers, you're in the right place. Each episode, Ryan breaks down the business side of law with straightforward strategies to help your firm run smarter, earn more, and scale with confidence. I'm Heidi Mack, and today's episode is Monthly Financial Check-ins, Staying on Track Without Drowning in Numbers. Welcome back, Ryan. Thank you so much.
Yes, excited to be here today and excited to dive into this. So thank you for having me.
Thank you so much. We all need this information, just not law firms as well. Everyone.
Yes.
All right, so let's get started. Why is a monthly financial check-in so important for law firm health?
Yes. So really and as you mentioned, law firm health, but also all businesses, right? Your financials are really where your end results from you operating your business shows up, right? I really treat it, if we were treating business as a game, right? If we were in a game, your financials are really your scoreboard. They tell you whether or not you're winning or losing. And so having a monthly check-in and really reviewing your numbers and having a look at those and seeing how you're doing, numbers are great because there's no emotion in them and we can compare them to previous periods. So seeing how you're doing, am I better than last month? Am I better than last year? All really important things to consider. And again, they're really your end results. So they're your scoreboard. They tell you whether or not you're winning the game or losing the game.
We all love sports. That's an easy way to, compare.
Yes, indeed.
Yeah, what should we be reviewed then during these check-ins to stay ahead of the problems?
Yes. So really two big things. Number one is your profit and loss or income statement. This is probably what most businesses are familiar with. And I would say you don't just want to review revenue, right? A lot of business owners look at revenue and how much did I do in sales? That's going to tell me whether or not I had a good month. But in reality, getting all the way through reviewing your expenses down to what were my profits of the business, your profits are going to tell you really how efficient your business is operating. And so getting down to the profits number is really, really important. Then after that, the second statement you should always be looking at is your balance sheet. Your balance sheet is really going to tell you the overall health of your company as it stands today or as it stands at the end of that month that you're looking at. And your profit and loss, really, it does feed into your balance sheet. But looking at your profit and loss and that net profit really starts the balance sheet, right? And so you've got to take it from there and kind of take it to that next level and look at things like, well, what is my bank account balance doing? What are the balances on my debts that I might owe? What are the balances on my receivables that my clients might owe me, right? All of those things are on your balance sheet, and those are really, really important to review on a regular basis.
So then how do you structure these check-ins for firms without a finance department?
Yes. So number one thing is definitely partnering with the right people, right? If you've got a great bookkeeper or bookkeeping firm that you're working with, they should be producing these statements for you on a regular basis. You definitely want to collaborate with them, get any questions that they might have answered so that you can get those kind of draft statements when they're done, right? And then from there, if you've got a part-time CFO or an advisor that you can meet with and ask questions on the financials to really keep you on track, that would be really great as well. And they can really do some heavy lifting for you, right? If you get into a rhythm, get into a meeting rhythm where they know what you want to look at, they know what your questions are going to be, they know what numbers are important to you, and they can also give you, some advice on, well, you need to probably be watching these 2 or 3 numbers as well. They can really come to that meeting prepared in time, right? It's not going to happen meeting one, but in time, they can really come prepared, and your meeting times should get shorter and shorter because you've covered the same numbers that you need to, and both sides are prepared and you're in a rhythm. So working with outsourced partners, it's definitely doable. You don't have to have people in-house hired in order to get that monthly check-in done.
So I think I was hearing you say a little bit about this already, but like what are the 3 to 5 key reports every firm should look at monthly?
Yeah, so definitely AR summary report for law firms. Again, see which clients owe you,
Mhm.
what balances they have. Again, if you're working with a great financial professional, they can sort this for you on by who owes you the most, right? Again, depending on, and you as the owner, as the lawyer, you're going to know, oh, well, that client, a $10,000 balance is no big deal for them, right? They're a big corporate account versus maybe a $10,000 balance is a big deal for an individual, right? And so really being able to look at that, know what the balances are, that's a great start on the collection side. Outside of the profit and loss and balance sheet, I mean, that's really a zoom in on your receivables, right? Next thing I would say after that is really your billings from your current month, right? So what did we bill this month based on our time, or if you're doing flat rates, what did we bill based on our newly opened cases? Because even if you haven't earned all those funds yet, that's going to tell you the cash that's coming in the door tomorrow, right? As you earn it, you're going to, or maybe you've billed it today, you're going to collect it and it's going to go in your trust account. That's going to, again, be transferred over eventually, and that's going to be your revenue of tomorrow, so to speak, right?
Yeah.
Third report would definitely be, your work in progress. What cases do we have hours outstanding on that we haven't billed yet? Those are really, again, that's kind of revenue of tomorrow, working on forecasting forward and seeing how good is our revenue going to be next month. Well, let's have a look at what we've got in progress, right? I think those are all important reports to review. A lot of those are going to come out of like a case management software, but those are really going to help you, again, kind of just map out how cash flows through your firm, right? If you can take those 3 reports and you know what your bills are going to be and what you've got to pay your people, and you've gotten down to a monthly, like I've got to have $50,000 to keep the lights on at my law firm every month, right? If you can get down to that number with those 3 combined reports, you're going to be in good shape for sure. I would recommend looking at those 3.
Nice, nice, nice. So yeah, like looking for these red flags, looking for these emerging trends early. How do you help manage this for these partners, for these firms?
For sure. Yeah. So I put all of our financial metrics that we need to look at on a scoreboard, right? And each month they're going to be color coordinated based on how we're doing with each one of those metrics. Obviously, so green, yellow, red. Green is, hey, the metric is doing really good. It's doing what we want it to do. We're hitting our numbers here. There's nothing to worry about. We're on track to have, it's really contributing to the financial strength of the company. Obviously, red is the complete opposite end of the spectrum. So, when I get together with a monthly meeting with the business owner that I'm working with, or with the law firm owner I'm working with, our numbers review is really, really quick, usually 10 to 15 minutes, because I've got that rhythm down. We've got the 10 or 12 numbers that we need to look at, and it's all color coordinated. So we can pick out the 2 red numbers that we need to really dive in on, because they're the ones that are holding the firm back. And if we can dive in and make changes to those, then we're really going to pull the lever and improve profits, or improve cash flow, improve what the owner's taking home, and just improve the overall financial health of the company when we can turn around our red numbers into green. So again, it makes things very straightforward, very simple, very quick. But we know that we're working on the most important things, the most important numbers.
So what can happen then if you're going too long without reviewing these financials?
So to me, I think if you're going a long time and you're not maybe you're not having financials produced, maybe you just are kind of running your business, and then at the end of the year, you take all of your transactions and bank statements to an accountant and they do your taxes for you. I mean, you're really flying blind, right? Mm-hmm. You're probably looking at your bank account balance, how much is in there, and maybe you're judging like, oh, I had a good month if your bank account balance is up, or, you a lot of times law firm owners kind of associate balances with it, right? They're like, oh, well, if it's down to 10, I've had a really bad month and I need to pick it up, versus if it's up to 30, I know that I've had a really good month and I can, spend some additional money, right? And I think that's a very dangerous way of living, right? Because you're really not knowing what's driving the results, what you see in the bank account balance is the end result, but you're not knowing the driving factors behind what those changes are. And so not having a financial check-in, not having a real good handle on those numbers and what's driving your results can be really, really dangerous, and not being in the loop. Wouldn't recommend it.
Oh, I'm learning so much. So, I mean, I'm assuming then, so these regular check-ins, they can improve decision making and accountability. Like, how do you see that? How does it do it?
For
Like,
sure. Yes. Yes. I completely agree with that. And I think if you're not reviewing your financials regularly, how do you make decisions, right? If you're making decisions from the bank account balance without knowing what the driver is behind that, it's hard to know whether or not you're making a good decision. You're kind of just winging it on your gut instinct, which might not always be right, right? And so having a regular monthly check-in does help us make decisions. And then there again, for on the accountability side, really building out a strategic plan, on how we can change our red numbers. Really, as the business owner, you know that you and your team are working on the most important things to pull that lever of more profits, more cash flow, because we've pinpointed it as the red number that's holding you back, right? Or that's not doing well. So you have no doubt, right, that you're working on the best thing that you can work on. And as a business owner, like even, myself, right, there's hundreds of things we could do every day. We don't have the time for it, but there's hundreds of things we could do. And so when you review your numbers and you put together a plan to change your red numbers, for certain, based on the financials and based on what's happened already, that you're working on the most important things. And so holding yourself accountable to that, building out that plan, that's what's going to be the driver behind better results for you in the future.
well, you've been giving us advice this whole time, but is there anything else to tell us how to stay consistent with it, with the financial reviews all year?
My best clients, we block meeting times out for every single month, right? Even if you don't have a CFO that you're working with, just blocking out that time in your calendar and really sticking to it. Maybe, and again, I'm just going to throw out random times. Maybe it's like the second Monday of the month, right? Or maybe it's the second Friday of the month, whatever works into your schedule. Could be an afternoon, could be a morning, but really having that time blocked out on your calendar. And if you're working with financial professionals like a bookkeeper, or if you are working with a CFO, really setting up your meetings for the year, right? Especially because their calendar most likely is going to be available the further out you go. So setting
Yeah.
appointments for the next 12 months, most generally is probably pretty easy, especially you get 2-3 months out. Most of us don't have things on our calendar. So, and then obviously, if something comes up, just have the accountability to reach out and move that meeting as needed. But having the time set aside and holding yourself accountable to always having that meeting, I think is one of the best things that you can do, even if it's just with yourself, right? To sit down and review. I mean, I would recommend, I think it's better and you're going to be more accountable if you have somebody that you're meeting with, because you're not just going to miss the meeting. But if you do have to do it with yourself, block the time out, sit down and do it. Don't pass it up, right? Really, really important.
Yeah, like, because I mean, obviously, this is what you do. How do you help build that routine, like, for each firm? Like, is there something, you do for each individual for their leadership style?
Yeah, so I think the first thing is we've got to have our foundation. Our numbers have to be done. So I do dive into processes there, right? And make sure that we've got processes that work for us so that the numbers can be done timely. And that does differ, firm to firm and based on leadership styles and personality and all that. But I do get in there and we put processes together to make sure that we're on track for that. And then the other thing I would say too is once we have the numbers out, that's one thing, right? But then also just being consistent in, the attorney schedule of when they're billing, when they're getting their invoices out, I think is really important as well. And so those procedures are going to go in. And then after those two things have happened, then we can set, well, if your numbers are out on the 3rd, let's just say your bills are out on the 5th, now we know when we can meet, right? And it's after the 5th, right? And you can use whatever days you want in there. It could be the 5th, the 8th, and the 10th, right? But knowing when all of those things are done, it just puts everything in order. And so then that lets us know when we can meet and really sit down and review all of the numbers and really look not only at, well, what just happened last month, but also what did we just bill, right? And we can look forward.
Wonderful, wonderful. Thank you so much. So thanks for listening to the Legal CFO with Ryan Kimler. If you're ready to get financial clarity with your law firm, visit netprofitcfo.com. Don't forget to like, follow, and leave a review, because the more you know, the more you grow. Thank you so much, Ryan, for all your information and for joining us today.
Yes, thank you for having me.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.